Continue to watch all that's going on. We do have the Dow up about 72 points now, NASDAQ better by 21, and the S&P up 8. Thanks, Adam. Chinese markets rallying 5.8% overnight. Yes, while that's the biggest intraday gain in 6 years, it's nearly completely fake. They bounce while looking impressive. It's fake because the government isn't allowing anybody to sell stocks. Stocks are down close to 30%, although now it's about 23% from the June 20th high. Half the stocks listed on the Shanghai Composite are halted. So why would anybody want to invest in China? Joining me now, Mark Kennedy, former U.S. representative of Minnesota. He's also former Macy's treasurer. He's been to China in the past month. Tell us exactly what's happening down on the ground there, because it seems like it's now getting more and more panicky.
It is getting panicky, and the Chinese government is throwing a lot of money at this. So the speculators are saying if China's going to throw this much money at it, it will go up. But long term, it hurts their credibility, because what's really needed is market reforms. When you have the regulator providing liquidity, when you have the Chinese government telling state-owned companies to buy their own stock, when you have stocks that doubled in the last year, all of a sudden suspended from trading, that makes investors nervous. And the Chinese government has promised reforms, promised to back away from these short-term boost to the market, but we're not seeing it now.
Okay, but at the end of the day, can we really trust the numbers and anything now that comes out of the Chinese government? They are heavily involved. I mentioned yesterday they've thrown every tool, including the tool belt, at this market. You can't short stocks, you can't sell or buy certain stocks that are completely halted, and you can't sell stocks that aren't halted until they're up 20%. It's a bubble bursting with some real drama.
It is a bubble bursting, but the real challenge the Chinese have is they need to continue to have economic growth, to have credibility with their own people.
Well, they have 7% GDP. To us, that looks very enviable. I mean, I know it's well off the 11% that they had a year or two ago, but tell me, if you were an American investor who's listening to you right now, would you say stay away for now on Chinese stocks?
I'd be very nervous, because they can see a short-term prop. The short-term prop only makes it harder in the long term to keep this going, because for it to continue to have long-term growth, to keep that 7% you're talking about, to have outside investors continuing to focus on real growth. And what we're seeing here is a prioritization of fake growth, of a bubble being focused on, rather than just what's necessary to give long-term investors confidence that this is a place where they want to continue to invest.
Great to have you, Congressman. Thank you very much for sharing what you saw on the ground. He says it's a little panicky right now. They've got a bubble bursting. Mark Kennedy, former senior VP and treasurer of Macy's. As I mentioned, former congressman from Minnesota. He's got a lot of titles, but he's got a lot of thoughts. Great to have all of you guys joining us right now.